Hello, hello. Come right on in, everybody. It's Stock Savvy time. Come right on in. I'm getting all ready for Stock Savvy, and I hope that you are too. Say hello in the comments when you arrive. I want to just make sure that you can hear me and you can see me. So just say hello in the comments and let me see some comments come in, and that'll tell me that you hear me, you see me, and I can see what platform you're coming from. Welcome. I'm Carolyn Williams with Money Reverse, and I am here to teach, to actually lead you in a Stock Savvy course. So I'm so looking forward to this. I do this a couple times a year, and it's always it feels so good to share things here with you and to kind of share some education knowledge, get you a little bit empowered, and then I tell you about my upcoming longer training that's going to come forth in about 3 or 4 weeks. So I kind of give you a preview of coming attractions of more lessons that I'm going to have coming in, more of my paid programs. But this one is not paid. So for 4 days, you can come right on in. Let me see if I see your comments. Let's see. Okay. Okay, come right on in. Say hello in the comments when you arrive. We got a full lesson coming today, a full lesson. Actually, like I said, for the next 4 days. Today is day one. So this lesson plus 3 more right where you're watching right now. If you're watching this on the replay, look for 3 more videos that's coming right after this so that we can kind of get some information out there about being savvy in the stock market. Let's get started. I'm going to share information about what we are going to be doing in this session, in this episode of Stock Savvy Sessions, again, for 4 days. Day number 1, we're going to first have a biblical investing lesson. I'm going to talk to you a little bit about why I do Stock Savvy, and we're going to talk about wanting to be a trader. If you want to be a trader, or if this interested you because of having trader knowledge in there, put in the comments, I want to be a trader. So, and then we're going to do stock talk. How big and how much? Learning about how to research stocks. So let's see here if I can, yeah, there we go. So we're getting ready to get started. Carolyn Williams, join me. I am going to I typically open all of my sessions with prayer, but we're going to jump right into the biblical investing lesson, and I'm going to have prayer right after that. Money Reverse is not only my brand, it is my promise. I'm going to put it up here, the full logo, Money Reverse. You can see the V in verse, the R is small in reverse, the V in reverse is capitalized, and it is on the logo looking like a Bible. And that is because everything that I do in terms of money education is going to be following Christian biblical principles. That's my goal. That's my life. That's my goal. So that's what we're going to get here, getting started. Hey, Joe, thank you. Thank you for joining, and thanks for saying hello in the comments. So let's get started in a biblical investing lesson. Biblical investing lesson. God gives us the power to get wealth. This comes from Deuteronomy chapter 8, verse 18. And the scripture reads, "And you shall remember the Lord your God, for it is he who gives you power to get wealth, that he may establish his covenant, which he swore to your fathers as it is this day." Again, that's Deuteronomy chapter 8, verse 18. That is the New King James Version. The wisdom points are on the right in gold. And the first one says, center your life around God, his promises, and your purpose in him. The key point of this scripture, if you notice how many times he and his are noted in this instruction, and the he and his every time is capitalized. That tells you that it is not talking about just any male. It is talking about God. So remember the Lord your God, for it is he who gives you the power to get wealth. Whether you're with an instructor to help you out, or whether it's male or female, know that it is God that gives you the power to get wealth. So focus your life around this, understand this. And then I want you to expect that you are able to do this through the power that God has invested in you. So seek him in your investing efforts. And then in advance, thank him for giving you that power to get wealth. It is he who gives it. So if you are a receiver, receive the word. It is in the word. It is already done. So even if you have not used any knowledge that you have at this point to get wealth, and only the stock market is only one way that you can get wealth, but it is he who gives you the power. So we thank you, Lord. We thank you for giving us this power. And then we honor him with everything that we earn. Any wealth, and remember, wealth is simply having more than enough. Wealth is simply having more than enough. Honor him in all that you earn, having more than enough. We want to use those funds to do what God has called us to do, to give to the building of his kingdom, and to fulfill that spiritual assignment that he's given us. Because he's given us the power to get wealth so that he may establish his covenant that he swore to your fathers as it is in this day. And the covenant was the covenant of Abraham, to give him his people and the land as far as the eye can see. So he has promised his covenant to us as he swore to your fathers as it is in this day. So God gives us the power to get wealth. Deuteronomy chapter 8, verse 18. Let us pray. Father God, as we start this Stock Savvy session, we say first, you be glorified. Lord, thank you for giving each of us the power to get wealth. Those that are here, those that are watching on the replay, those that are watching as it's being shared on their timelines, for everybody, Lord, thank you. We give you glory. We thank you for giving us the power to get wealth, because we know it is by your power that we are able to do these things. Lord, as we go through this session, I pray that we bow to you, Lord. Anything that's in our hearts and minds that may tell us that this is not possible for us, that this is difficult for us, Lord, we cancel those assignments in the name of Jesus. Lord, I thank you for giving us clear understanding. Even after each session is over, continue to teach us as you can and you will, because you are the ultimate teacher. We thank you, Lord. We give you glory. I pray abundance and wealth to everyone and every family that is represented here. In the matchless name of Jesus, I pray. Amen. The information provided here today is for educational purposes only. Any market information that I share is purely commentary and should not be construed as investment advice, nor should the information be construed as a solicitation to buy or sell any securities of any kind. Well, let's get started. Thank you for joining me in Stock Savvy. Carolyn Williams here. I am in the bottom right-hand corner. I'm going to be here to talk to you. If you have any questions, definitely post them in the comments. And I'm going to give you just some information about why I'm doing Stock Savvy sessions. If this is your first time ever attending a Stock Savvy session, can you put in the comments first time? Even if you're watching this on the replay, put in the comments first time. I do this, I think twice. I try to do it twice a year. And I have been doing this for a number of years. So if you have never attended a Stock Savvy session, just put in there first time. You've heard me say this before. If you've been here before, I'm going to just put in the comments, I've been here before. And I'm going to say, welcome back. And I'm going to say thank you for being patient as I go through this, because I want to make sure that I share the whole story every time. So thank you. I see Shauna's been first time. Thank you so much for joining, Shauna. So with that, let me tell you why I do Stock Savvy sessions. Let's look here on the screen. I have here in the orange a chart that shows some historical U.S. market returns. So this is what the stock market has done in historical in the past. Let's take a look at the top here. The first column, you see the year, and then we have other columns here. Bank savings is the first column. This tells you how much, if you put your money in a bank, in a savings account, this is what your returns would be. Now, this is an average by the FDIC to say not every bank is going to give 0.40%. Some are higher, some are lower. This is an average based on FDIC.gov, that website here. And right below where you see me, I have all of the sources where I gathered this information. The next column is S&P 500. This is the stock market. In 2025, as of 10/17/2025, which was this past Friday, 2 days ago, Friday, Saturday, Sunday, Monday, 3 days ago, then stock market as of this point is returning 13.28% as of Friday, 10/17. If you put your money in bonds, the short-term bonds, the 3-month T-bills, the return is 3.93% right now. And then 10-year bonds, long-term, it's 4.01%. So with that, there we go. Just wanted to share with you what the returns are right now in the various ways in which you could do what you could do with money that's not used to pay your bills. Now, take a look at all the historicals. Look at 2024, 23, all the way down to 2011. I said I was going to only do about 5 years or 8 years here, but every year it is so hard for me to try to get. I just want to keep all the history here so we can see it because the story is the same. I want you to look down at the bank savings column, all the way down 0.40%. You can see we made more than 1% on our monies in the bank in 22 and 23. And that is when we were recovering from the financial turmoil of COVID. So those 2 years, 22 and 23, and you can see that the stock market was way down in 2023. It was down 19.44%. But all of that to say bank savings less than 1%. Stock market, take a look. Most times you will see this double-digit returns. There are a few years, 2022 minus 19%. We had been up so much between 20 and 2021. Look at 2019, 31%, 2020, 18%, 2021, 28%, 24% in 2023, 2024, 23%, and now at 13, and we still have a few months to go. Stock market has given double-digit returns on the S&P 500 for a long time. Take a look at that. Take a look at the bonds. I'm going to group them all together, both the short-term bonds and the long-term bonds. We did pretty good in the bond market in 22 and 23. As a matter of fact, we had an inverted yield curve, which means the short-term bonds were paying more than the long-term bonds. You can see that in 23 and 22. And so it was kind of a get the financials back right for 2 years after COVID. So with that, take a look at the bond market of what it has returned. The reason for this is because I want you to know this, and I want you to know that the stock market has been giving a pretty positive return or a significantly higher return, even in years where the stock market did not do well. It was still higher than the bonds, with the exception of 2022. So with that, 2022 and 2018. So with that, I just want you to know the stock market is not something that is so far off that it's not something that you should be considering. And in these lessons, I hope that in the next 4 days, you learn that it is not so far off that you cannot get it. You can get this. Okay. And it's expected that we all know something about the market. There are 401k plans, retirement savings plans that your company signs you up for. If you're working in corporate, your company signs you up for these plans, but there's very little education on them. They are expecting that you know something and that you know enough to choose your own investments in your plan, get in your plan, up your contributions. The assumption is that you know that. And so in most cases, people don't. So I do this to kind of help educate. And this is why I do. I don't want anybody that knows Carolyn Williams in Money Reverse to not be in the know. Okay, here we go. This is why I do Stock Savvy. I just do it twice a year. But I want you to know, if you've been here before, I see some people in the comments that say they've been here before. Let me know in the comments. If you've been here before, why do you come back? Why do you come back? Some of this is going to be the same teaching, but tell me in the comments why you come back if you have been in a Stock Savvy sessions before. I want to see what you say. Okay, now in Stock Savvy, I'm going to teach about learning to research stocks, learning to make good stock choices, learning to look at the news and understand what's going on in the stock market. I always have another topic that I'm teaching on, and this time it is going to be, want to be a trader? I'm going to tell you, I took some time off in the summer. I have not worked since May. So I kind of shut everything down. Now I have some clients, and I said, for those clients, I still met with those clients that I'm building portfolios with, clients that I'm helping them with their spend management, credit adjustments. I'm doing some different things with clients. I didn't turn clients away. I turned new clients away, but I really didn't take any new clients. And so since May, I've kind of been just, hanging out around the house, doing things around the house, take a few trips, spending time with family reunion, a lot of things. And so this is kind of my first effort back at working again, to tell you the truth. So I want to say that when I was not available, people weren't seeing me online, they weren't seeing emails from me, and they said, Carolyn, I want to know about being a trader. I can tell you I had about meetings with about 10 people without me advertising anything, without seeing my face online. People said, Carolyn, I want to learn to be a trader. I want to be a trader. Do you trade? I said, yes, I trade. I have a trading group. I'll tell you more about what I do a little bit later. But when I saw that, I said, let me kind of share about being a trader. I'm going to do this in the next 4 days. Every day, we're going to have a short lesson on being a trader. And I want you to these are some things that the wisdom that I teach for those that join my trading group. And these are my philosophies. Now, they're not everybody's philosophies. If you talk to different traders and different trade instructors, they all have a different philosophy. So for you, I want you to find the individuals or group that you jive with, that you agree with the philosophy, you want to buy into the philosophy. And one's not right or wrong. It's just a different way of doing things, okay? So it doesn't mean one's right or wrong. So I'm going to teach you the Carolyn Williams and Money Reverse philosophy on trading. So let's do it. I love your comments. I see your comments. I'm going to share some of those a little bit later. Let's first talk about the difference between trading and investing. Investing versus trading. The whole difference is the time horizon, the time horizon that you see when you move into buying an investment. But we want to see what is the time horizon. When you're investing, you have the long term in mind. You want to buy something knowing that you are going to make money on it. The investment is going to be worth more down the line, and you want to have continual wealth building over a period of time. We do most of our investment in our retirement savings accounts, in your 401k, 403b, 457, TSP, IRA, SEP or simple, Roth or traditional. That's where we do the long-term investment. You buy something, it's in there, and you look at it and you go, oh, wow, look at what it's done in this last quarter. Wow, look at what it's done in a year. That's investing. You're buying something and you want continual wealth building over a period of time. It doesn't necessarily have to be slow. You can get fast wealth building over time. But because I have bought some things that I knew were going to go higher in price, and they went higher in price really quickly. The stock NVIDIA is one of them. Amazon. I'll share some of those things that I bought, and I bought them as an investment. Now, if I'm doing a trade is a short-term approach. You're looking for quick money. You're saying, I want to get in this and I want to get out as quickly as I can with a profit. So trading is where you're buying it not for the long term. It doesn't mean that you're going to sell it tomorrow. It can be any time period. The whole thing about you building your environment, your trading environment, doing this is that you can do it whatever way you want to do it. It doesn't have to be that you're trading it and you're going to get in and out of it today. You could be in a trade for, 6 months. 6 months. When I work with my clients, I teach a philosophy of having your portfolio divided into 3 equal parts. One part is your long-term investments, and you can do this in a single portfolio. That way you don't have to keep opening all these different accounts. You can group your money all together and have part of it that's for your long-term investments. And then you have a part of it that's what I call for my ATM. Those are my trades, but I leave them there until I need the money. So if I bought Amazon stock or Nvidia stock, and I bought all of these when they were very low, and if you don't know, those stocks have just skyrocketed in price. And I have trades that are in profit that are 6 figures, in profit over $100,000. Just one stock. One stock. And so with that, when I need to have this, I don't want to speak anything into existence, but if I had a major something that happened in the house and I needed to get a new bada, and it was $9,000, $10,000, then I would go to these funds and get it, that trade money, because I'm ready to sell it at any time. But if I don't have a need to sell it, then I'm just going to leave it there. Why pay taxes on it? You don't pay tax on the money until you sell it. So that's what I call my ATM. So when I need funds, I go to this ATM, and those funds are sitting there. I had a client that called me, an ex-client that called me and told me that's exactly what he did. He said, I took the Carolyn Williams method. I needed to go buy bada for the house. I went and sold some stock and went and bought this for the house. I say, that's the way to do it. No running up credit card bills, no hitting your savings account. Okay, and then this other part, the third part of your portfolio, I want that to be for quick money. Those are the things that you want to get in and out quick. You want to get in and out as quick as you can with a profit. That is the things that you want to do if you're looking to have an income portfolio. You want to have money that's coming in from your investments on a regular basis, to either for something specific that you're planning for, to benefit your household. But this is where you want the income, and I call that an income portfolio. I have clients in which we've built income portfolios, and they have funds coming in of, $1,100, $1,200 a month from an income portfolio. So I'd like to say you can determine what these timeframes are. I don't want to tell you that your investments need to be there 10 years and your midterm money needs to be there for at least a year. Nope. You can make a determination however you want to do it. And those also with your trading. Trading does not have to be overnight trading. You get to determine what those things are. Now, if you have any questions, I'm going to answer all of your questions a little bit later. A couple of times here, I'm going to bring up a slide that says I'm available to answer your questions. So don't let today pass and you have questions and you don't get them answered. You got me for 4 days. I'm not going to try to sell you nothing until the 4th day. So these first 3 days, it's take. Put me to work. Ask me questions. Okay. So with that, let's go back here. So when we're talking about investing versus trading, so investing is your long-term, time horizon is long-term, and your trading is a short-term horizon. So let me share. Now, trading, you can trade any security that you want. You can trade stocks, you can trade options, you can trade Forex. Well, first of all, stocks, we know what stocks are. We're going to talk about stocks exclusively today. What options are derivatives of stocks. So options, the whole backing of an option is a stock. So you can buy a piece of paper that gives you the right to own that stock, or the right to sell that stock, but you don't have to own that stock and you don't have to sell that stock. You just got to think of it like a coupon. If I had a coupon here that gave you a free hamburger at Wendy's, that coupon is worth something. It's like, here, you can have my free Wendy's hamburger coupon for 50 cents. And people go, well, yeah, because the Wendy's hamburger costs, $5 $5, $8? Yeah, I'll pay you 50 cents to be able to go get this hamburger for free. That's what an option is. So they are all about backing stocks. So it's just a piece of paper that gives you the right to buy or sell a stock. You can also trade Forex, and that's short for foreign exchange. You can trade currencies. That's where the Japanese yen, or you can trade different currencies from around the world. You buy them and you buy them at one price. And when the exchange rate changes, which it does all the time, then you can go and sell it when the exchange rate is more in your favor. That's called Forex trading, and you're trading to different currencies. And you can also trade cryptocurrencies. That's Bitcoin. Bitcoin and all of the other cryptocurrencies. I do trade stocks, I trade options, and I trade crypto. Now, for this session, we are going to talk about stocks exclusively. I want to let you know I do have a trading group. It is the Money Reverse Quick Money Trading. And in this group, what I teach, I do have a preliminary that you have to take my stock trading class, my 21 days class, and then take this trader traction lesson to be in that group. And what I'm going to share here is some of the lessons that I teach in the trader traction prelim to be in this group. That's what I'm going to use for the lessons here. So just so you know, in this group, we only trade stocks. If trading options is something that you're interested in, my take on it is I think you really need to understand stocks. Remember, because options is just a derivative of stocks. I think to be a great options trader, you really need to understand stock. That's my philosophy. That's one of the reasons why I don't teach options, is because I want to teach stock, because once you know stock, you don't have to come back to me again for anything. You can pick up options real quick. Once you understand stock, you don't have to pay nobody to teach you options. You can pick that up because once you understand the philosophy behind stocks, you can understand options pretty easily, I feel. Okay. So with that, we are going to talk about stocks in these 4 days. And if you're interested in my quick money trading group that I'll tell you about on Thursday, then that is going to be exclusively for stocks. Okay. Now, let's talk about trading, quick money trading. What we do in quick money trading, what your philosophy is you want to seize the opportunity to get in a stock now and exit that same position as soon as you can with a profit. You want to seize the opportunity to get in a stock now and exit that stock as soon as possible with a profit. Okay. So how do you do that? Number one, you look at getting in stocks that are positioned to move. The second thing is that you jump in stocks that are moving right now. If you see something that's taken off, you jump in stocks that are moving right now, and you set up for positions that are expected to move. You watch and you wait. You know what you're looking for. You know what you're expecting the stock to do. You watch it and you wait, and you take the profits when they're there. Take the profits when they're there. Rinse and repeat. Let me tell you. So any questions on this? But this is the whole philosophy of quick money trading. In my quick money trading group, and this is just the Carolyn Williams Money Reverse version of this. In my quick money trading group, we have trading goals every week. We set profit goals of how much money we want to make every week. We track and measure, and every Sunday we meet and we put your numbers up there. Everybody sees everybody's numbers, so you can see how you are at reaching your goal and how the team is at reaching their goal. And you see everything that I'm doing as well. You see everything that I'm doing. So with that, it is about hitting your profit goals for the week. So we're not sitting here waiting for something that may happen, 6 months down the line. I mean, a stock may turn into that if something happens and it doesn't go the way we thought it would go, and that happens, and you may end up waiting a long time, but that's not our goal. So we're seizing the opportunity to get in a stock now and exit that position as soon as possible with a profit. Okay. Now, let me tell you some things that quick money trading is not. What we're not doing in quick money trading is we're not day trading. There are SEC rules against day trading, and we'll go through those rules. I'll explain what the rules are. Does that mean you'll never make a day trade? No, that's not true at all. As a matter of fact, a day trade is when you get in and out of a position in a single trading session. If the market opens at 8:30 a.m. Central Time and closes at 3 p.m. Central Time, if you buy something between 8:30 a.m. and get out of it before 3 p.m., that's a day trade. So you can do that, but there are limits to how many times you can do that before that broker is going to start requesting that you have a lot of money in the account. So we are not day trading on purpose. It doesn't mean that you will not make a day trade. When somebody asks me, do you have a day trading group? I go, I started, I'm so, how do you say it, exact and, and technical. I should say, no, we're typically not, but I just say, yeah, I do. I have a trading group. I don't say day trading group, because then once you get the education, you're going to understand day trading. And then you're going to see, oh yeah, we don't want a day trade. We may make a day trade, but we're tracking him to make sure that we don't end up being labeled as a pattern day trader. What we're also not doing as a trader is waiting for that $1 million trade. Remember how I just said, we're not going to sit here and wait for that one thing that's going to happen and bam, it's going to take off and I just made $4 million on a single trade. No, what we're doing in quick money trading is we're picking it up $200 at a time, $1,000 at a time. We pick it up as it comes. Take the profit as it's there. If you have a $300 a week goal and there's 4 weeks in the month, that's $1,200 a month from sitting in front of using your phone while you're at work, $1,200 extra a month. $300 a week profit goal was very, very small for my trading group. At one point in my trading group, my profit target was $3,000 a week. And most weeks I made that. $3,000 a week. Now, that was back in the heyday of all of the market swings that was going on with COVID. And we're seeing some of that again right now. But yeah, we had profit targets of $1,000 a week, $500 a week. Again, my highest profit target was $3,000 a week. And most weeks I did make that. Now, what we're also not doing when we're doing quick money trading is we're not guessing and we're not gambling. We have enough knowledge to know what to look for, to know the precipitating events, and to make moves based on that. I want you to think opportunity. If you hear me right now, I want you to type in the comments, opportunity. We're going to talk about opportunities a lot here, because when you know about opportunities and you know how to spot them, then you don't have to guess and you don't have to gamble. It's not hard to figure out opportunities. If you join my quick money trading group, and in these 4 days, I'm going to show in tomorrow's lesson, I'm going to show you 3 opportunities that you can take advantage of right now. 3 opportunities, trading opportunities that you will be able to take advantage of right now. In my training, I think I teach you 12. Well, we're going to talk about 3 of these tomorrow in tomorrow's lesson. So with that, let's get going. Thank you. I see you guys in opportunity. Hey, Christy. Hey, Shauna. Shauna said, yeah, opportunity. Let's do it. Let's do it. So let's go. So with that, I hope that tells you, this is the intro lesson for today, to say what we're now. Based on that, does anybody want to be a trader? Is this what you had in mind with trading? This is just the Carolyn Williams philosophy. Different people will have different philosophies, but if this kind of philosophy that you think you can fit with you, put in the comments. It fits. It fits, because this is what I'm going to be using over the next 4 days to say, when I say want to be a trader, I'm going to teach you as I teach my quick money traders. And so with that, so that's our lesson 1, want to be a trader. So tomorrow in lesson 2, we're going to talk about identifying trade opportunities. I'm going to give you 3 stock trading opportunities that you can jump on right now. Fits. Yeah, that's good. If it fits, we're going to have fun this week. We're going to have fun this week. If you say, Carolyn, I want to sit and watch charts all day, and I want to be able to look at candlesticks and do this, you can do that too. You can do that too. But when most of my clients are working full-time jobs and traveling and have their phones, they're not sitting in front of a computer watching all day. They're just not able to do that. So with that, that's not the way I learned. I've been doing this for over 25 years. Wow. I've been doing this for over 25 years, even when I was in corporate. Even when I was in corporate, I was trading, but I wasn't sitting watching charts all the time. That's not how I learned. That's not how I did it. And that's not how I teach it. Okay. So join me back tomorrow and have your pencil and paper ready. Although you won't need pencil and paper because you're gonna be able to get it. I'm gonna just show you, and you're gonna be able to get it. I promise you, you won't need to take notes. You're gonna get it. You're smart people, I can tell. I see some of you. I know many of you that are out there in the audience. I'm looking at your comments. Those that are commenting, you're sharp cookies. You can get this. So join me back here tomorrow for part 2 of Wanna Be a Trader? Let's do it. Now, I want to share with you, I don't want you to sit in a 4-day stock savvy lesson, and not know what's going on in the market right now. I want you to know what's going on in the market right now. And you should always know what's going on in the market right now. So what I'm going to move my picture, and I'm going to share here what's going on in our stock market by looking at the indices. Oh, look at this. Hey, I know this person. Hey, fantastic. Yes, ma'am. Let's talk about what's going on in the market. Don't ever sit in any type of a stock training session and not get an update of what's going on in the market. And once you finish the training session, you should be able to give this update to anybody. So with that, I'm going to teach you things that even after this session is over, you're going to have knowledge that you didn't have before. And so I'm going to say, you're welcome in advance. So let's just talk about what's going on in the market. What I have on the screen here is our 3 major averages. Here in the US, there's many stock indices, and an index is simply a short view of what's going on in the overall market. There's billions of stocks being traded in our stock market, and I can't tell you what's happening with all of them, but I can look at 3 major indices: the Dow Jones Industrial Average, which is the most popular of our US indices. It is actually 30 stocks, and it's representing all of our 11 sectors and many industries. So that's the Dow Jones Industrial Average. The Standard & Poor's 500. This is the S&P 500. This is 500 stocks across all of our major market sectors and industries. So you get a better view of what's going on because it's 500 stocks instead of 30. Now, the Dow is 30 stocks that represent, for the healthcare stocks, it's the best couple of healthcare stocks. For the technology stocks, it takes a lot to be in the Dow, because they want to look at this and have a good view of what's going on in all of the major areas. The S&P 500 is 500 stocks. So you get a little bit of a better view of what's going on because it's simply more stocks that are being looked at. And then the NASDAQ, the tech stocks. The NASDAQ is an exchange. It's where things are traded. It's that building there that I have on the picture that sits in the Times Square area in New York City. That is the first technology only exchange. An exchange is a building where the stocks are traded. All of these are the exchanges. The Dow Jones, that is the NASDAQ is an exchange as well. But the NASDAQ, because it was all technology at first, it is the first. It has mainly technology stocks on it. Now, what I have here is December 31st, 2024, the last trading day of last year. I'm going to show you here what has been happening all year in our markets with these major averages. Now, take a look at the numbers as of December 31st, 2024. Notice how the numbers are different. Don't compare the numbers to each other. You can't. You only compare each indice to itself. We only compare Dow to Dow, S&P to S&P, and NASDAQ to NASDAQ. I can't tell you how. These are weighted averages of the stocks that are in the index. But I don't know how they're calculated, and I don't care. And I don't want you to care either. What I want you to care about is how these numbers compare to itself. Okay? So let's not get caught up in the stuff that really don't count for nothing. Okay? So let's look at the first two quarters. The first calendar quarter in March, you can see here that the Dow was down just a little bit. So was the S&P, went from 58 to 56, and the NASDAQ went from 19 down to 17.2. And then in June of this year, we saw that not only did it recover, but went higher than it was in December. The Dow went to 44. The S&P went to 62, and everybody sees, I'm just looking at the first of the numbers here. And we went to 20,000 on the NASDAQ. All of these, notice that these were all higher than it was at the beginning of the year. That was in June. So we saw a pretty big market swing. We got some good volatility that happened here in May and June. So let's do again. Let's go forward one more time. So let's look at the third calendar quarter that just passed not too long ago, September 30th. Look at where they all are. They're all higher than they were even in June. The Dow is at 46. The S&P is at 66 and 22.6 for the NASDAQ. And then as of this past Friday, October 17th, 2025, at the time of this recording, 46,190 for the Dow, 6,662 for the S&P, and then the NASDAQ, 22,676. Look at our year-to-date performance on these. They're all in the green. The Dow is up 8.51%. The S&P is up 13.28%, and the NASDAQ is up 17.43%. Today, we had the Dow up over 500 points, so things are running right now. We're seeing that volatility again. When I took off for the summer, I let my traders know I'll be back in the fall, and they said, what? They said, can we still have access to the log and everything? I said, no, I'm going to shut everything down. And, but do you know, my traders were texting me because we were making money. I wasn't in the group, but they know how to trade. They know how to trade without me. And I know they do because they are with the best instructor that they could ever find. That's me. So I want you to know what's going on here, but take a look at what has happened since June. So know that it's still, now we are still in the middle of a partial government shutdown. So does this mean that everything is going to keep going up? No, it's not. But, and does this mean that since June, we have seen nothing but upside days? No, not at all. When we have seen down days, the down days have been strong as well. It has gone down huge amounts. That is volatility. So remember, what's the word I told you to remember? Opportunities. That is an opportunity. It's swinging high and low. We got some pretty volatile market swings happening right now. And for traders, this is a trader's heaven. For long-term investors, this is kind of, oh my God, I don't want to look at it. A trader wakes up in the morning going, oh yeah, here comes the volatility. This is a trader's heaven. So that's one reason why I wanted to talk about being a trader. So just know what's going on in the market right now. And anytime that you're in any type, I want you to also look at these averages on a regular basis, just so you know what's going on. If you want to be a trader, you start watching so you know what's going on. Okay, now if you have any questions, I'm looking at your comments. Yeah, I see that you guys say it fits, opportunities, and I'm going to talk about why. Oh, hey, I see lots of people that I know. Hey, y'all, thank you for joining. So let's go. Let's move forward. That is, want to be a trader. Now, the second part of Stock Savvy Sessions is Stock Talk. And in Stock Talk, this is where I'm going to teach you how to research stocks. So every one of our Stock Savvy sessions is going to have the biblical investing lesson. We're going to have Want to Be a Trader. We're going to have also a Stock Talk, and then I'm going to give you some homework. So we're going to kind of go through this same vein for the next 4 days. So if you can set aside the time, I hope that you can join me. It's fun when you're here. I love to see your comments. It makes it more fun. Otherwise, I could just record a video and stick it out there. But no, since you're here live and you got me live, Ask questions and participate. If I say something that sounds good, put in the comments, that sounds good. Okay, let's talk about how big and how much. Let me throw a scenario out at you. A friend walks up to you and gives you a stock tip, or better yet, they text you or they call you and say, hey, I want you to know about this stock. It's a good one. I got this from somebody, and I knew you would want to know this. You need to jump on this. You need to jump on this. I said, have you bought it yet? No, not yet. But I knew you would. I knew you would, though. Okay, so say thanks, buddy. Say thank you. Don't ask too many questions. I mean, I want you to ask some questions, but I want you to ask some questions of yourself. So what do you do with that information? I'm going to tell you what to do with that information. I want you to ask some questions, not from your friend, but I want you to ask these questions, and I want you to answer these questions yourself. Ask 2 questions. How big and how much? Now, they gave you a stock tip. Let me tell you what I want you to do with that information. Okay, so how big? What we're going to talk about is how big is the stock that this person gave you? Is this a fly-by-night company? Is this a company that doesn't have any employees? Is this a company like Money Reverse that just got 1 employee and you want me to put what are we talking about here? Is this an Amazon-like company? Is this a company that's overseas? Is this what are we talking about? So the first thing I want you to know is how big is the company? And the way we tell that is with market capitalization. Market cap for short. What market cap is, it is the total market value of a company. It is basically how much they're worth. It's the total net worth, the company net worth. So you take everything that the company owns, all of their inventory, all of their assets, their trucks, their boats, their stores, the money in the bank, the accounts receivable, and you take all of that, and then you take away how much they owe. That is the net company worth, not just their income, take away their expenses as well. And that is the company net worth. That's market capitalization. Now, when you take that market cap and you look at how many shares that company has out there on the market for people to buy, you take that total market cap, you divide it by how many shares they have out there for sale, and that is the stock price. So with that, the company size is determined by the market cap. So with that, when you just look at the market cap, it's going to tell you how big of a company that we're talking about here when your friend gave you this tip. So with that, how do you say, is it a big company? Is it a small company? When we look at market cap, we don't just talk in numbers. We talk in these market cap capitalization categories. You can have a mega cap stock. This is when the market cap is in excess of 200 billion. A large cap is the market cap is between 10 billion and 200 billion. You got mid cap, small cap, micro cap, and nano cap. So with that, a lot of times if you're looking at your 401k and you look at the different options that you can put your money in your retirement savings plan, you'll see words like this. This is a large cap fund. This is a nano cap fund. That's what they're talking about. Are they talking about big companies? Or are they talking about small companies? Now, when you see this red star on the side, I want you to take a screenshot. If you can, take a screenshot of this. This is something that I want you to know, I want you to understand, and you're going to need it for your homework. So it could help you in doing the homework. But the reason that you want to know is because the mega cap stocks tend to be the more stable companies. They're the ones that people have the most trust in. They're the companies that they have money in the bank. They have assets. They've been around for a while. They probably have some large contracts, some large partnerships. So losing one major client probably won't send the mega cap companies out of business. Where the nano cap companies, they may have one major client, and then if they lose that contract, then sometimes these companies go out of business just for that reason. So with that, mega cap companies tend to be more stable. The larger the companies, that tends to be more trust that they have in them for your long-term investing. Now, let's look for trading. The opposite is true. With the nano cap, These companies, a nano cap, they could be a small company. The stock could be trading at $3, and you get a notice in the news that they have a partnership now with Amazon. Woof, and it goes from $3 to $12 in one day. What if you had 100 shares of that $3 stock? That $3 stock, you had 100 shares, you spent $300. It goes from $3 to $12. That's $9. So that's $9 times 100. That's $900 in one day. That could happen. As a matter of fact, it does happen. It does happen. So with that, I want you to understand these different caps and understanding what you want to do when you're putting money in the market is very important, because I want you to know, are you thinking long-term or short-term? Because you can say, for my 401k, I'm interested in the mega, large, and maybe some mid-cap. But for my trading, I'm interested in the nano cap and micro cap and maybe a few mega and large cap stocks, because the mega and large cap stocks, they're higher priced. So it doesn't mean that anything is off limits. It's just a matter of what do you want to do with that thing. Make sense? So if your friend had given you a nano cap stock as an investment opportunity, then it doesn't mean that it's bad because it's a nano cap. It just depends on what you want to do with that. Okay? Got it. Let's go forward. Now, let's show you an example of that. Market capitalization. Here we are. I got an example here, and I pulled a snippet from Apple. I pulled this today. Apple, you can see what I have circled. Apple, the company name is there, and the company symbol, AAPL. You can see the stock price is also circled, $263.73. Apple hit a new all-time high today. Apple is up 4.53% at this time. And I think if you look, this was just after 2 o'clock Central Time or Eastern Time when I did this snip today. So Apple hit a new all-time high today. Now, let me tell you how you find the market cap for Apple. You pull up the stock quote and I have it circled. You don't have to calculate. You don't need a calculator. I have it circled over here on the right. Market cap intraday, you can see it's 3.914 trillion. It's real small on my than 200 billion. This is a $1 trillion market cap stock. So that's how you do it. You don't need a calculator. You don't need to add anything up. All you need to know is how do you take the number that they give you and translate it to a different market cap classification. This is a mega cap stock. Okay. Now, the second thing that I want to share with you is about 52-week high and 52-week low. 52-week high and 52-week low. Okay, good. I thank you. I saw that I was breaking up a little bit. Thank you. If there's something wrong with my volume or anything, or if I'm breaking up, definitely let me know in the comments. Thank you, Shauna. So let's take a look at 52-week high. What I want you to ask yourself is how big and how much? How big is the market cap? How much? How much is this stock? What has this stock done in a year? You're telling me about it now, but what has this stock done in a year? The way we're going to look at that is we're going to look at 52-week high and 52-week low. 52-week high, this is the highest trading price at which the stock has closed in a year. Actually, yeah, and then the 52-week low, this is the lowest price in which the stock has closed in a year. Now, I say closed because for years it was closed, but I did some research recently, and when I show you the quotes, whenever it hits an intraday high on some of the quotes, it will show you that price, that highest price, as the 52-week high, even if it didn't close at that price. So just say 52-week high is the highest that we've seen this stock at this year. It doesn't necessarily have to have closed. And then the 52-week low is the lowest trading price for this stock in a year. So take a look at the spread between the two and look at the current stock price to say, is it kind of sitting midway in the range, or is it in the higher end of the range? So let's take a look. 52-week high and 52-week low. Let's look at Apple again. The same quote. Where we see 52-week high and 52-week low is right below where I have circled. It's below the in the same column as the stock name and the stock price. You can see 52-week range. It is 169.21 to 264.38. That may be it. It's pretty small on my screen. I can't hardly see it. So it may not be the numbers, but you can see them there. So that is the range. So then take a look at that in comparison to where it is right now. Now, because Apple hit a new all-time high today, you can tell it's at the high end of the range because that happened today. That's one of the reasons why I chose it today. I wanted to show you this one. Okay, so that's how you can tell how much, how big, and how much. Okay. Now that I did everything and I put it right there in front of you, I'm going to show you how you can do it if I'm not splashing it on a screen right in front of you. What I'm going to do is show you how to do the same thing, but we're going to go to Yahoo Finance, www.finance.yahoo.com if you're on your computer, or you can download the Yahoo Finance app to your mobile phone. I'm going to use the computer version here, but when you're on your mobile, you'll be able to figure it out. Just as simple. Now, what you do, I have the front screen of Yahoo Finance right here. If you know the company that you're looking for, even if you don't know the symbol, we're going to use here as an example, Netflix. Now, there's two places where you can just type in the whole company name, and I got an arrow here going to the top where you can put it in here. I always go to this one, quote lookup, on the right-hand side. And that's because once I pull up a stock and I go to this, when I pull up another stock, I go right back to this same place as opposed to this one at the top, because the stock quote is not gonna look like this once you pull up a stock quote. So just by habit, I always go to this right one that says quote lookup. You can type in the whole word Netflix, or you can type in the symbol. If you type in the whole word Netflix, and if you don't know the short symbol, just type in the full name and it'll come up with a drop down and you'll be able to choose what you're looking for, and you'll see Netflix US. So suppose we did that, and this is what comes up. This is the full screen for Netflix. I'm not going to show it to you like this, but just so you see the Netflix at the top and you see the price. Look at Netflix price, $1,241.71 earlier today. It was up $42 today. This is a mover. Okay, and you can see the chart right here, and then below the chart is the quote. I wanted to show you that's what it looks like on the computer screen, but I'm going to zoom in and only show you the parts that we're looking at. So let's do that now. So I pulled the quote portion and I just blew it up a little bit so we can actually talk about what we want to talk about. And so what we want to do here is look at the company name, company symbol. You can see all of that, and the stock price. Look at market cap for Netflix. Over here, the market cap over here on the right-hand side. And then you can see here 527.792 billion. This is definitely a mega cap stock. A mega cap stock is more than 200 billion. So it's 527 billion. Now, to see the 52-week range, I don't have it circled, but I have an arrow pointing to it. The 52-week range is right below the stock price, about almost 2 from the bottom. You can see 52-week range. You can see the low was $744 and the high was $1,341. So this is how you look at the things that I've just shown you. So not only did I tell you what they were, I've shown you how you can go pull up any stock and you can know how to do this very quickly. So the next time that friend brings you that stock tip, then you know how to go look and see if they're talking about anything that you're interested in. Now, there is a red star here. This is an example that you could use to do your homework if need be. So if you want, take a picture of this one anytime you see the red star. Your homework is going to be to do exactly what I had you do here, is to identify 52-week range, stock price, stock symbol, all of these things. So if you want to take a picture of that, now's the time to do it. And we have another one. I have another one. It's called Orchid Island Capital. I went back to the beginning screen, but you don't have to. I just didn't show you. Anytime you see that quote lookup on that Netflix screen, and when you see quote lookup, just go put the next symbol in. You can put the whole name or you can put the short symbol. But I went back for ease of teaching. I went back to the beginning. I'm going to go for Orchid Island Capital. I start typing that whole name over here and quote lookup. And once I get in the first word, it's going to start giving me a drop down to show things that I could possibly choose. And you'll see Orchid Island Capital. Let's take a look at this stock. So take a look at this stock. There is the stock name, Orchid Island Capital. The symbol is ORC. You can see the stock price, $7.49. And I have both of these, how big and how much, which is the market cap to the right. It is 1.135 billion. 1.135 billion. This, according to the chart, is a small cap stock. The chart is 250 million to 2 billion is a small cap stock. And then on the left-hand side, below the name and the stock price, you can see the 52-week range is circled. This stock has traded between $5.69 and $9.01. So, is this a stock that you're interested in? Just this information doesn't give you enough to say, I'm interested in this stock yet. We're going to grow and we're going to look at these stocks every day and get more and more information about these stocks. But right now, it's not enough to say that you're interested in buying it. Just like the information that your friend gave you is not enough for you to determine if you're interested in buying it. Don't go buy with somebody giving you a tip like that until you do at least these things. Okay? Now, I'm going to give you some homework, and the homework is going to be to do exactly what we have just been doing. So with that, I'm going to put a link in the comment for the homework sheet. So hang on. I'm going to put a link in the comment. Okay, I just put something in the comment to say, this is, if you click that link, it should take you to the homework sheet. I see that it had an error. I'm going to try again. Okay, so I put a couple of links. I can see it went out there on YouTube, on Facebook. I think it may be out there for both of them. Okay, good deal. For YouTube and Facebook, you should have a link. So with that, I want to give you some homework. And the homework is going to take into account, how do you do what I've just shown you how to do? Sitting and watching and listening is good, but I'll tell you, if you do the homework, it's going to make it stick. Nobody will ever have to teach you this again. The homework takes very little time, but it's going to benefit you so much. Okay. So what I want you to do is I want you to complete research on 2 stocks from the list that I'm going to show you in just a second. And I want you to claim your stocks by entering your name in the column, in the selected by column. So with that, update your homework sheet. When you get to the homework sheet, then I want you to put in there, for the stocks you've chosen, the stock price, the stock symbol, the market cap, the 52-week high, and the 52-week low. So for everything, you're going to enter the stock price, the stock symbol, the market cap, 52-week high, and 52-week low. And so what I want you to do is I want you to add one stock of your choice to the list and complete the same research for your stock. So that we can be consistent, I want you to use Yahoo Finance for your research, www.finance.yahoo.com, or you can download the Yahoo Finance mobile app. That's so that we're looking at the same thing. You can use anything, but just for consistency, since we're going to do this for the next 4 days, use Yahoo Finance. Okay, now this is an example of the homework. When you click the link there, you will see a sheet that looks just like this. And I have an example here that our assistant, Hetty Watkins, did. She looked at the stock Walmart. So what you see here, her example is in yellow, and you can see she filled out all of the things for Walmart. The only thing that was there is the company name. And you can see right below Walmart, you see Abbott Labs, Airbnb, Amazon, AMC. There's a whole listing, probably about 150 stocks. So you just pick the ones that you want, put your name in the claim by, and put the date there. That way somebody knows that you've already claimed that. So with that, then you can go to Yahoo Finance and enter the information for the stock that you chose. Then go and choose another stock. You can say, yeah, I see you got some stocks out here, but I want to do research on another stock that interests me. Then go and take at the bottom of the list, there's some blank lines. Go and just put your name there and enter a stock or two that you're interested in, add it to the sheet and do the research for that. Okay? And try to have your homework done before we meet for class tomorrow. We meet tomorrow at the same time and same place. Okay, now that's it for the lesson today. I'm going to spend some time answering your questions, but I first want to just let you know that we are having class tomorrow. You didn't pay tuition, but I'm going to ask you to show up and I'm going to ask you to have your homework done. You go, you got some nerve. So with that, join me. You can see Monday, October 20th, 2025, which is today. That is crossed off. That is done. So you can see we have 3 more lessons and we're going to go higher and higher in every lesson. So if you found that this was beneficial and you found that this is something that you learned something from, just put in the comments, I learned something. Okay. And let me know if you have any questions. Let me know if you have any questions. Okay, Shauna, I see Shauna says I didn't get the link. Now, one thing is, let me see. Shauna, if you are watching on my Money Reverse, are you watching on my personal page? If you're watching this on my private Facebook account, you won't see the link there. Okay, good. Shauna says I learned something. Shauna, let me know where you're watching. Are you watching on my private Facebook page? Are you watching on my Money Reverse business page or Money Reverse YouTube? The links are only going to show up on my Money Reverse page. What I will do after this is over, I will go to the video recording on my private page, on my Carolyn Williams my Carolyn Williams Facebook page, and I will post the link there. Great. Oh, great. Thank you so much, Latrice. So I just thought about that when she said, I don't see the link. I go, oh yeah, it's not going to show up on my personal page. Let me show you my face here. So with that, okay, I hit on your pictures and that's how I got in. Okay, that's good. Excellent. Okay, now any questions? Let me see. I think I had let's see if I had another slide to show you. No, the next slide was just going to be questions. Any questions from anybody? Good. Anybody else learn anything? Anybody else learn something? Okay. Now, I asked a question earlier. I want to ask those questions. Several of you that are here have taken the Stock Savvy before. And I asked why, if you've taken this before, why do you come back? And I saw some answers, and I'm going to look at those answers. Okay. Look at those answers. Why have it taken? Okay. One says, we started it, but didn't finish it. Here's to complete what we started. Thank you for coming back. Each Stock Savvy is a little bit different. It's the same, a lot of the same things I'm teaching, but that little topic, like this topic is, I want to be a trader. Each time I have a different lesson. So it's always good to go back and watch the other ones too. One says to brush up on what's going on in the market and your take on it. Good. Yeah, because I do give you my take. I do give you my take. He said, been here before, said, love you and always learn something new. Thank you so much. Yes, you do. I love seeing Ginger here. That's my Boston support there. So I call her Boston, but her name is Ginger. Virginia, Ginger. Okay, let's see here. I see several of you that says, been here before, first time. Thank you so much for joining. Everybody, I enjoy doing this, and we're going to do this for the next 4 days. So I want you to come back and actually refresher. Yeah. Thank you for coming back, Christy. So with that, I want you to do your homework. Let me know if you have any questions. I'm going to go to my private Facebook page and I'm going to put the link there because this is only going to share it on my Money Reverse YouTube, and it's going to share it on my Money Reverse Facebook. It's not going to share it on my private, but on my private page, but I did broadcast on my private page. So those that are watching on my personal Carolyn Williams Facebook, Not Money Reverse, I'm going to put the link there just for you. So you can also do the homework. It's open and free. It's not too late to share this with your friends and family too. So if you want to share this out on your timeline so they can watch it, if you thought it was good, say, hey, I'm taking this class, watch it and join me tomorrow. That's good too. So I think thank you. Joe says, I will be back. Yes, Shauna says, thank you. I really appreciate you. Thank you so much. Everybody, that's it for today. Join me back here tomorrow. We're going to go a little bit higher. I'm going to talk to you about some trading opportunities that you can jump on right now. And we're going to start researching stocks a little bit more. Okay? Thank you, everybody. See you tomorrow.